Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. I'm glad to have back Michael Krieger of Liberty Blitzkrieg, and Michael also writes for Zero Hedge. So thank you very much for joining us again here today, Michael.
Jason, great to be on with you again. My pleasure.
Great. Now, Michael, last time you were on, I think it was before the election, and we saw, I think both of us predicted correctly that Obama was going to win. Romney might have made things a little bit closer than we thought, but have the American people voted for more socialism, less freedom, and more stagflation, more government control of the economy?
I mean, look, I am no fan of Obama. I think he's one of the worst presidents in American history. I think he's got zero backbone. He's a puppet. He's in the bed of Wall Street, large corporations. Basically, the top 0.0001%, which basically essentially owns the formerly democratic processes in these United States, he's just a puppet of them. So look, Romney would be a puppet. Obama's a puppet. I didn't endorse either one of them. I endorsed Gary Johnson because
me too.
Because he was saying more of the things that I believe in. I don't agree with him 100%, just like I don't agree with anyone 100%. But I disagree with 90% of Obama. I disagree with 90% of Romney. So I think the American people are in a stupor. Most people do understand that these guys are just crooks and corrupt, just like in a banana republic you go to. If you go down, my brother was in the Peace Corps in Guatemala, and you go down there, all they're doing is bitching about the politicians and the corruption. And look, I think that's what's sort of the general attitude here too. But it's like, what can you do about it? You can do a lot about it, but people are kind of busy and trying to survive, and so they're not. And then of course, you have the 20%, let's say 30% of the population that are just completely, like literally comatose, in cheering their Republican or Democratic side as if it's an NFL football game without actually knowing anything about anything. Goes for the sort of partisan sheeple on both sides. So it's a mess. I think most people know something's wrong. I think most people know system's corrupt, but we have yet to sort of really launch a counterattack, I think, against the system in a peaceful, nonviolent way, which I hope is coming in a bigger way. But so far we haven't seen it.
I think because in the mainstream media and how good the politicians are at spinning things, I think they've been able to blame, free markets and capitalism for a lot of the problems that have been created. So I think that's why the American people then are incorrectly then choosing more government control because, they see all of these corporations as evil and greedy. And yes, there are bad corporations that spend a lot more money on lobbying than they do on research and development or growing their business or things like that. But the majority of corporations aren't like that. There's a lot of hardworking small businessmen and entrepreneurs here in the United States who still, do the right thing, look for win-win scenarios and things like that. And I think that's what the business aspect, the value creation aspect, that's just not being taught in business schools anymore and to kids at a young age.
Yeah, I think one of the things that I try to talk about, and I know you agree with and have mentioned as well, is I saw recently there was, I guess, a poll conducted that stated that I think it's the demographic between maybe 18 and in their late 20s, maybe like 18 and 28, have a more favorable view of socialism than they do of capitalism, right? The terms, of course.
They should, though, right?
Well, see, there you go. Exactly.
If they've been brainwashed their whole lives, right?
Well, I don't think it's brainwashed. I actually think it's because what is called capitalism isn't capitalism, right? And that's the key thing. If someone defined capitalism as what we have right now, I wouldn't be in favor of it either. So that's the problem, right? We don't have that.
So the politicians though are. Sorry to interrupt you, but that's the message that the politicians are getting across is that this is capitalism. I think that's what they want, right? And we both know that it's not capitalism.
Right.
At all.
So right, exactly. So what you do is, as many people have discussed, is you call this corporatocracy of cronies and payoffs and Wall Street banksters. You call that capitalism. You demonize it, and then you say it's all free market's fault, as a way to take over the economy completely, because you say, see, when you have capitalism, this is what happens when it's not capitalism in the first place. It's very sophisticated. They know exactly what they're doing. Most people probably couldn't even define socialism in America. So, what do you expect? I mean, we have a very, very dumbed down population. It's not their fault in the vast majority of cases. Either they're subject to horrible education growing up, parents that don't care, or they just are too busy trying to, again, like put food on the table to educate themselves. So we're in a very bad situation, and that's why, again, I mean, the education of the people, however many you can get through to, which is what I'm trying to do right now every single day, is the key. It's very, very important that we try to get as many people as possible to understand how the game works, so that they won't be completely herded and slaughtered later on.
That's very good. And to add to your point, Michael, I also got in a Twitter war today with this guy who's one of the main TV guys on Yahoo Finance, and that's a mainstream business channel on the internet, watched by many, many thousands of people a day. And this guy is like acting like an anti-capitalist. He's saying that the government should mandate that the minimum wage laws are drastically increased and all these other things. And I was, I was just arguing for capitalism and defending free markets. And I was like, well, if a businessman wants to pay his workers higher wages, then that's fine. If his business has a market share or something like that and they have a cash cushion, they can afford to do that. But it shouldn't be a government mandate then that, we're going to raise the minimum wage laws to $12 an hour, because it's going to end up creating even more unemployment, or it's going to create, more people working off the books, or more people then who can't get jobs, because those jobs are just going to evaporate because of all the other benefits like Obamacare and stuff.
Yeah, see, I think this is why, this is partly why we're in such a dangerous spot right now. Is that what ends up happening is, and I'm not faulting you for getting into that argument about a subject that in a vacuum I would agree with you on. But what happens is when people don't focus or talk about the core issues, right, which is Wall Street bailouts, the Federal Reserve, fiat money, all those things, right? The core things that allow all the perversions and mess up the economy so much to occur. Then what ends up happening is people start arguing about things that are on the margin, right? Like, so whatever happens with minimum wage will affect certain groups of people tremendously. Some businesses very poorly, some employees benefit for a bit. It will have an impact to some people. But in the larger scheme of things, right, what we do with minimum wage is not going to be the make or break of the society, culture, or economy. In the larger scheme of things, Michael, in my opinion, I think it's going to just make the stagflation in the real economy worse. No, I don't disagree. Like I said, it will have an impact. But what I guess I'm saying is it's not like the existential issue, right?
Okay.
It's not
the main issue.
It's not the core, exactly. Right? So what ends up happening is you end up getting into an argument with people that can make the argument for minimum wage. Like, if someone said, well, I can make the argument, for example, I could make it. Given what we've got for the argument to raise the minimum wage, you could say, oh, well, you have Wall Street on subsidies. They get bailed out. They pay bonuses. They're totally on the teat of the government. Well, why shouldn't you just pay people more? I mean, again, it's like I don't want to make that argument because I disagree with both. But that's my point, right? It's like if you don't deal with the core issues, if you don't deal with the real important things that will make or break our society, the other stuff doesn't matter, right? I mean, what does it matter about minimum wage when we don't have rule of law? Where a guy like John Corzine, because he's connected and he gives a lot of money in support to Obama, can do whatever he wants, loot people's accounts, steal, cheat, bankrupt the company, right? Destroy the reputation of the futures industry in the United States, right? I mean, see, these are things so these are the things that I think, it's like, you want to argue about other things, or people want to argue about other things, okay, but unless we deal with the problem of the Federal Reserve and the rule of law and Wall Street being above the rule of law, I don't think anything else matters. I really, really don't.
And that's part of the problem is the mainstream media doesn't want to talk about these important topics that you and I like to talk about. We're not going to be allowed to probably go on Bloomberg or CNBC and talk about these important issues for more than a minute or two, and even then for a minute or two, I don't even think they would let us. They would start changing the subject. because I know I've seen Michael Pinto on there, and Pinto likes to talk about that. If you're familiar with Michael Pinto's work,
yes,
and every time he talks about abolishing the Fed, he gets 1 minute on TV, and then they cut him off.
Yeah,
so it's just very frustrating.
You're absolutely right. Which is I think about this to myself all the time when I do see mainstream arguments. Not that I even see them that much anymore because I don't really watch TV. I don't watch TV. But I do know that they just argue and talk about and discuss the most ridiculous things just to keep people from talking about what's important. And I think it's Voltaire, but don't quote me on this, but who said, you really know who the power behind the society is by who you can't criticize, who you're not allowed to criticize. And so that's where I sort of and I completely agree with that because, it's essentially those issues, and I've been saying this for years, the issues that all Americans that care and are interested should know, that matter the most, that are the most important ones to fight for and be aware of and get educated on, are the issues that Republicans and Democrats agree on. That's it. The more heated the argument is between Democrats and Republicans in the circus media, the more they don't matter. Right, the more that it's irrelevant, because they don't want you talking or thinking about the stuff that matters. And the Federal Reserve, other than a few people like Bernie Sanders and Ron Paul, and I think Dennis Kucinich had been critical before too. And of course, two of the three are no longer in Congress now. Were critical of the Fed, but it's like a 1 out of 100, or 1 out of 500. And so, that's why I keep going back to the Fed and the Fed and the Fed. Well, it's also the warfare state, now with the aggressive imperial military and the drones and the targeted killings and the NDAA, National Defense Authorization Act, Section 1021, which allows for the indefinite detention of American citizens without trial. The Obama administration is probably going to appeal all the way to the Supreme Court. These are bipartisan issues. These are issues that Republicans and Democrats agree on 100%, and they're the most dangerous ones. So it's like we've got much bigger things to worry about that are happening right now. Huge battles to be fought, and both establishment parties are fighting against us very actively.
Yeah, both parties are in favor of big government, and they really just disagree on cosmetic issues,
exactly.
Like you mentioned. And one party might favor welfare a little bit more, and one party might favor warfare, and
right.
These things might switch. But other than that, I don't remember where I heard the quote, but someone said it's almost like professional wrestling, where they say, okay, well, you're going to win for the next 4 years, and then they switch back, like heel and toe and all these crazy acting stuff. I think it was Jesse Ventura.
Yeah, well, right. Well, he would know, right? I mean, he was a professional wrestler.
And a politician.
And a Navy SEAL. Yeah, the guy's really done it all. I mean, he probably knows more about, how the world works than anyone. But yeah, so like you say, I mean, look, you're in D.C., the cancer of America, as I like to call it. No offense. It's like Hollywood for ugly people. But it's like they benefit, right? The politicians benefit no matter what. And that's the thing.
Their whole paradigm here in D.C. is to just if we could just do this and kick the can down the road a little bit further. No matter what the stake is in the long term, just maintain the status quo. Got to make every last cent. And Wall Street, unfortunately, has basically turned into the same thing. I mean, Wall Street used to be
right.
Obviously, there were scams and stuff like that on Wall Street in the past, but the majority of Wall Street used to focus on long-term value creation. They used to help grow mainstream businesses, and that was the whole purpose of markets, right? Of the stock market was to get mainstream businesses the capital they needed to grow.
Yes, right. No, you're right. What sort of happened, and I agree with the Washington Wall Street,
the two towers. It's the Lord of the Rings analogy, the two towers.
Yeah, sure. I mean, I agree. It's like you've got these two groups that are extraordinarily powerful, that rub each other's backs, that protect and also watch each other's backs, who, as you say, I mean, look, politicians, I guess, by nature, I think the type of person that goes into politics happens to be the exact opposite of the type of person that I ever would like or get along with. But in Wall Street, not necessarily. I really, when I was there and I started out, I found a lot of the people, at least in the beginning, to be smart and interesting. And most of the smart, interesting people, dropped off. And, of course, I have a lot of friends that are there that I respect very much. But, it's like at the top, these guys, you know, like a Jamie Dimon or even a Warren Buffett at this point. I mean, these guys, you know, these guys they're clearly not trying to they clearly don't believe in capitalism, right? Even though they say they do. They believe in power, and they believe in enriching themselves and making themselves as powerful as possible. And I got to tell you, I don't think that for a second these guys think about, you know, what's right or you know fairness in what they're doing. It's like no matter what, you know, no matter what they do, they have to win, basically. And it's really sad, and it's like a reflection of our culture in general at this point. So.
Yeah, that's a very good point. And, you know, they get the losses socialized and stuff like that. Now, I want to transition here. We talked a lot about philosophical stuff and politics, which, I mean, our markets are very heavily politicized. But let's get your take on the markets here. Has the Fed reinflated the real estate bubble? Because it looks to me like the Fed, I have real estate contacts in California, and they're telling me that a property will go on the market, and 2 days later it'll be paid for in all cash. And I'm hearing similar stories about hedge funds, you know, running around trying to rent out, buying massive amounts of properties and renting them out. So what is your opinion then of the Fed reinflating all of these asset bubbles? The stock market keeps going up in nominal terms. It looks like every time there's going to be a major correction, the market should have already corrected, something comes in and just knocks the market higher.
Yeah, so look, if you look back, and I wasn't aware of sort of how things worked as much you know, in the middle of last decade, but this is exactly what they did back then, you know, which led to the whole blow-up. You know, they purposely inflated a real estate bubble, even though they said they weren't doing that. They purposely elevated stocks, and they're doing it again. Now, I think as far as in both cases, it's very different in one important way, in that while I think last decade and it'd be hard to prove this completely, but I think last decade what they tried to do was essentially, you know, bring down interest rates, bring back confidence, and then let people inflate those things on their own. And it happened, and there was like a frenzy, and then it blew up. This is different in the sense that even though they're purposely targeting real estate and stock prices, and successfully with stocks, less successfully with real estate, but I'll get to that in a second. The big difference is that this, I believe, the capital that is being put into the in both markets is very, very concentrated oligarch capital. So in other words, you alluded to hedge funds and private equity buying real estate, which is a known thing. I've blogged about this for about half a year now.
I also hear it's massive amounts of money from crony capitalists in other countries with political connections to the central bankers, like in China and stuff like that.
Yeah,
so when China runs, you know, when the U.S. announces another QE program and China prints, there's Chinese government officials who are getting, you know, zero interest rate loans, free money, and they're, you know, taking private planes to California or Toronto or Vancouver and buying up real estate then with cash from the QE program.
Well, no, that's actually a known thing. Yes, I've written about that as well. And the angle that I read was essentially, it was a little bit different than what you're saying, but it's the same in the end. Was that actually it's corrupt Chinese politicians that they're cracking down a little bit over there on corruption, that are basically laundering their money out of China into the U.S. real estate market and real estate markets all over the place. But yes, it's a lot of money laundering from outside of the United States, corrupt, dirty money. And then, but the main factor is really it's like Blackstone and now J.P. Morgan's involved, and it's basically, like I said, it's this financial oligarch funds that are using low interest rates, easy money, and encouragement by the Fed to go out and buy up all of these properties and then go try to rent them. Now, this actually, if you think about it, this actually makes the whole real estate pop that we're involved in right now, and that's what I would call it. I don't think this is going to be anything like what it was in the middle of the last decade unless you have hyperinflation, which I don't see signs of at the moment. I
agree. I agree. I think we're stuck in permanent stagflation, at least in the developed world for a while.
Yeah, no, I mean, there's no reason to think that's not the case, and you know, it's a smart position to take, I think, based on reality, where like a lot of people like to go to the extremes of things just to kind of make a headline, like it's going to be hyperinflation or it's going to be deflation.
The central planners want the whole, you know, Ray Dalia. Ray Dalia wrote the paper, this long paper from Bridgewater Capital, like 20 or 30 pages, and the Fed has basically implemented that plan with the last couple of QEs, and that's, you know, the financial repression plan.
Right.
That after Carmen Reinhart wrote out part of it, then Ray Dalio adjusted it, and then now the Fed is implementing it.
Yeah, look, it's like I've described. It's what's going on is based these policies. What they do is it funnels money from the middle class and then the non-connected, non-crony wealthy to the 0.0001% oligarch cronies. I mean, that's what it is. It's all the money is flowing up to the 0.0001%. Poor get paid off on food stamps. Middle class gets destroyed. It's like this giant crushing of society into poverty and dependency. It's very sad and it's very deliberate. But anyway, I guess what I'm saying is that, you know, if you look at the returns that are expected by like a lot of these new real estate funds that are launching, they're actually really bad. And I think risk adjusted, they're horrible. And, you know, in some cases,
is it even 1%? Yeah, I think the cap rates are 1 or 2% returns on massive amounts of real estate.
Well, what I've at least been reading in the articles again is something like, you know, in a lot of these markets, you go, you buy them, you rent them, you get, you know, something like 5 to 6% return. And to me, annually. And yeah, I guess if you can compare that to, you know, risk-free treasuries or, you know, looks good, but I mean, that's not a big return. And you're, you know, considering you're in an asset that you may not.
You're allowing the U.S. government statistics to look good. You're helping out the statistics there at the BLS by helping prop up those markets. So you're doing the Feds a favor then and maintaining the status quo in another way.
Well, of course you are, but at the same time, I mean, let's remember, in a lot of these cases, they may not be experts in managing real estate to begin with. Real estate is a depreciating asset naturally. You have to put money into it to repair it, to fix it up. You have to collect rent. This is a tough economy. People are losing jobs. What if you can't collect the rent? You know, it's like 5 to 6% doesn't give you a lot of cushion. And then what if, you know, you top tick the market? You know, it's even scarier than before.
It reeks of desperation, in my opinion.
Oh, absolutely.
For them to figure out any possible way. It's like all these guys together are sitting in a back room, you know, at the Fed and Wall Street. It's an emergency meeting, and they're like, "How can we prop up the real estate market? Anyone got any ideas?"
No. I mean, that's not even like a joke. That's exactly what they're doing. That is 100% what they're doing. It's not even.
And then how can we keep down the commodity prices?
It's not even a debate. It's not even a debate. So that's really scary though, because it's like, what's going to happen next time there's a problem? Are we going to be bailing out Blackstone from the real estate? You know, are we going to be bailing out J.P. Morgan? It's the more concentrated actually this real estate bet that they're engaged in is as we both know. You know, as everyone knows, it's the history. Price controls don't work. This is a price control, except instead of saying, "Oh, you can't sell this for this cheap, you know, for price, you have to sell it here," it's saying, "Oh, you know, we need to like sit in a smoky room and plot how we can push real estate up." I mean, the fact.
Yeah, put a floor. Yeah, put an artificial bottom.
The fact that like this is the plan of our supposedly smart, enlightened leadership is so scary that people that know how things work, that's why people are buying guns. That's why people are, stocking up on food. That's all these things. Even though I hope. And
precious metal buying is going physical precious metal, not the paper, not the manipulated paper prices.
So that's why I hope. All Look, I hope none of these really, really bad things in society happen. And I've been saying for years that ultimately I'm optimistic after our period, but. It's because, look, if you know what's going on, you see that the leadership in America is absolutely crazy. And what they're doing is so much worse than what they did into the run-up of the last catastrophe. So, that's really it. It's terrifying, but for right now, if you're determined enough and you're willing to put enough money into it, you can do things. You can keep things looking okay for a while. And as you said before, kicking the can. Yeah, they're kicking the can. But they know what's at the end of the road, which is why Department of Homeland Security is buying billions of hollow point bullets. It's not an accident.
Yeah, I completely agree. And I think in a rational market, all of this behavior that's being done by the central planners and the central banks, this would result in super high gold and silver prices. And the last time we spoke, on the charts, we were talking about the charts for gold and silver and the mining stocks, and things had set up really nice. I remember we were speaking about a nice double bottom that was in, and it looked like a nice cup with a handle cup with a handle formation, which is normally a breakout formation. And all of a sudden, things just blew up. I think in December of 2012, that formation just blew up. The paper price got hammered, and it's been in total correction mode downward since. So, what do you think listeners then should do? Should they just, with their salaries, then keep buying bullion? What's going to be the best ways then to protect themselves in an environment like this?
Yeah, I'm gonna tell you what I'm doing, and then people can do whatever they want. But as we discussed before on this phone call, I am spending now 90% of my time on my blog, and my blog is more political, social, cultural than markets at this point, because a lot of reasons. One, I'm just bored with the markets. They're not even interesting to me anymore. As you mentioned, they're so centrally planned. But also, the VIX is at 12. Nothing's really nothing's really happening from a macro perspective in the markets. It's just dull.
And the commodity prices, well, except for oil, which I basically called the bottom around 78 to 80, and I think you did too. You said it was going higher. But I mean, nothing else in the commodity markets, in my opinion, is acting that rationally. It's just very difficult to invest and trade in these markets.
Well, I just think there's more for me with gold and silver. It was always about getting people educated, getting people protected, and trying to send a message with that. And after a while, it became very clear that the percentage of the population that was going to take the time to get educated about gold and silver and fiat money and all this stuff and do something about it, it had been reached, And that's when I sort of stopped talking about the metals so much, because I could tell that people that know, people that don't, it's just they don't want to know. They're not going to look into it. It's just they can't understand money for whatever reason, and they're not going to until they're forced to, which will happen, but it's not going to be precipitated. So I decided to put my efforts into educating people about other things, like the NDA, like drones, like civil liberties, things like that are so much more interesting to me, and I feel like more victories are being had in that regard. So that's where I'm sort of putting my effort. But what I plan on doing is this: is I am very distrustful. I mean, I have been for a while, but very distrustful of the markets, and I'm just not putting in the time to try to look at specific names like I used to enjoy. So for me, money that I make, I plan on putting towards physical bullion when on dips, and that's it. And not trying to predict when it's all going to blow up or when when it's going to go crazy and all that stuff, because it's clearly impossible to do that. And,
Our friend Greg Mannarino, I don't know if you've heard of him. We've interviewed him a bunch of times. He was one of the head floor traders at Bear Stearns, one of the top traders in New York on Wall Street. And he's even having trouble, trading the commodity markets. So what he does with his trading profits now is he buys physical too. So I think that says something. When a trader who normally makes his money trading is not doing nearly as much trading, he's even buying bullion.
Yeah, no, that's really what look. I'm not telling anyone else what to do. Other people have more time on their hands maybe to look at names and figure it out. I'm not saying people shouldn't do that. I'm saying for me, I'm not focusing on this stuff. I'm focusing on my blog, and I love the metals as much as ever. I've never sold an ounce of physical. I don't plan on it.
Me neither.
I may sell like some certificates or stuff, but as far as like the actual physical, no, I don't plan on it. And I'm looking at silver. I mean, silver's the one that I really am like have an itchy trigger finger with. But because right now, I think it's obvious that we're in a situation where people involved on the long side of this trade are in a tremendous amount of pain. What I'm looking for is a capitulation now. And so that could be sloppy and ugly and worse than anyone expects, and maybe it won't be. But I'm sort of sitting here saying to myself with silver, I want to see if there's like a capitulation sell-off that I could go and buy more physical. And guess what? If there isn't and I miss it, then I'll buy the breakout. But I'm not too, tempted to just go there and you know, say, okay, $29.50 silver, I'm going to go buy a bunch. You know, I already bought a lot, and you know, we're stuck in this sort of purgatory between, you know, what, the high 20s and like the mid 30s. You know, so it's like, you know, until we break out of that range, I'm not doing anything right now. And I don't care if we capitulate through the bottom of that range or we go through the top. That's what I'm looking to buy personally. And you know, I think for people that have a considerable position already, you know, I think that's a reasonable strategy. But for those that don't have, you know, a reasonable precious metals position, you know, in that case, I think you go ahead and buy some physical silver now. But in the case that you're ready, you know, you're in the trade, you're protected, you know, that's what and that's the position I'm in. That's what I'm doing. That's my
that's what a lot of we've been telling a lot of our consulting clients to do, is to buy bullion on dips like these, and then also if they have the cash to do so, I think the select people have to be very careful what they're doing research on, but certain select gold and silver and oil companies that are already making money are really good bargains at this point. They're just minting money in the stock market. It's not even recognizing the value right now. But in terms of your capitulation thesis, I think you're very close. I was looking at some research for the silver market and the all-in production costs. When you look at all the different silver producers all over the world, the costs have been rising so much the last few years and the grades have been going down, and the input costs, like for energy, have been going up, that most silver companies are struggling to even make a profit at $28 an ounce silver. So if silver were to go to 26 or 25 and stay there for a little bit of time, you would see a ton of projects, get postponed or even canceled that were supposed to be brought online in the next year or two.
Right. I mean, that's the thing. It's you know, I wrote about this last year, and it remains to be seen if I'm right or not. But I said that, you know, in this year, what we were going to see is at some point that as the demand for resources and, you know, precious metals in particular starts to get even more extreme due to, you know, global devaluation of fiat currencies, that you'd have that combined with supply reductions, because, as you say, the returns that you're making on a lot of these commodities aren't enough to justify, you know, marginal projects anymore. That you get this combination of the two all at the same time, like a freight train, two freight trains crashing into each other. And so we'll see if it's happening, but that's the dynamic you're discussing. And it's going to happen at some point. I mean, the wheels are already in motion. The question is, when does that happen? When do you start to see, right, the supply, all these past, let's say, couple of years where the mining industry has been struggling so much, when do you start to see that affect supply in a meaningful way and at the same time have strong demand? And that's when you're really going to see a move in a lot of these commodities. And, you know, it's coming, but it's like, again, I can't pinpoint when, and I don't spend my time on that kind of stuff anymore. So I'll leave it up to the resource experts. But I spend a lot of time on those markets, and I can't even tell you exactly when. But I can tell you, though, that the TSX Venture, where all the juniors are, the guys who are finding deposits that are going to go into production the next 5 or 6 years, those guys, like more than 90%, can't get any money right now. So those guys, a lot of them in the next 6 to 8 months, a large percentage out of the 1,500 total companies have less than $200,000 working capital left, and their stock prices are down 90%, and they're going to have to try to do a fundraising. So they're either going to go bankrupt or sell out their assets for pennies on the dollar, and then that, I think, will be another sign that the bottom is basically in for gold and silver. Yeah, I definitely think, you know, it's the smart thing to do at this point is to look for capitulation, look for those signs, because the pain has been going on for a long time now. You know, basically ever since late 2011. You know, you're right. These miners have been horrible. So it's not like a new thing. This has been dragging out for a long time, and you know, at some point here soon, you're probably going to see that capitulation. And that's going to be, I mean, then you could get into a situation, right, when you have capitulations like that, I mean, you could be in a situation where that's the low for a decade. And even if gold doesn't even do anything, it could be the low in the asset prices of the stocks. I mean, that's, how markets work sometimes. So
yeah, this reminds the situation. I agree. The situation that's happening right now, Michael, reminds me a lot of what happened right around 2008 in the crash. When people thought the world was going to end, and that's when I was deploying capital like crazy into resource stocks, all types of resource stocks, and dividend-paying stocks and stuff like that. So this is in gold and silver miners. Things are reminding me of 2008 in that regard, because people are like, all these companies are going to go bankrupt and stuff like that.
Yeah, no, it's even worse now because this is happening in the context of stocks close to records. I think the Russell 2000, the small cap index, did hit a all-time record.
And the paper price is double what it was. Basically, the gold price is double what it was in 2008, and the mining stocks are even lower than they were in 2008.
Well,
with the paper price higher.
If you look at the Huey Gold ratio, which I do look at from time to time still, you're at the lowest level since that 2008 period, but you're not there yet, but you're very close. You're very close. So the ratio of gold stocks to gold is almost at the late 2008 low, capitulatory low, which is incredible, really. But it's look, it's if you've got the stomach for it and you've got the capital, and you want to be you want to be playing these miners, you want to do it. Look for the capitulation. Look for that, because that's. I think it's probably coming soon. So if you haven't seen it already, but that's sort of how I would be thinking if you're looking to be involved in this space.
And then people can take some profits off the table after the run-up and then buy some more bullion. Just an idea, not any investment advice, but just an opinion that I think is a prudent idea. Then after you make some money on a trade like this, buying low, selling high, cashing out a little bit, and then buying some bullion with some profits.
Sure. I mean, I would never, discourage that. It's a matter of what you want to deal with when you buy the physical. Look, I'm just glad that what I did was, I bought so much of the bullion years ago because as much as they'll get smashed and manipulated and up and down, it's pretty easy to sleep at night and I feel very comfortable with that position. Whereas with these miners, I've been in them, and I would have had a lot more time to do other things in the last couple of years if I didn't have to watch these insane stocks. So, they could be insane on the upside too. But it just takes more. It just takes more time. It's about how much time are you willing to put in to this space. And if you're willing to put in a lot, I think sure. I mean, look at the miners, look for capitulation, do the work. I'm sure you're going to have some fantastic opportunities. But if you don't have the time and you don't have the patience and the emotional fortitude, just stick to the bullion. It's really about who you are and what your risk tolerance is.
Yeah, and if you're buying positions for greed or fear, because I've heard a good analogy about this, that most people buy the bullion for fear as insurance, and most people buy the gold and silver stocks for greed.
No, I think that's absolutely right.
Okay, well, thank you very much for your time, Michael. And as we wrap things up here in the interview, please tell our listeners more about your blog website and any other projects you're involved in.
Thank you very much, Jason. So, I launched LibertyBlitzkrieg.com in April of last year, so it's coming up to its 1-year birthday. It's been one of the most rewarding experiences of my life, so much so that it's taking over my life. And as I mentioned earlier, I'm spending pretty much all my time on it. My goal is to make this my primary profession. I mean, this is what I love. This is what I want to do. I'm passionate about it, and I think I can make a difference. So please come check out Liberty Blitzkrieg. That's Liberty BLITZKRIEG.com. You could sign up on the right sidebar to follow me on Twitter, which is @LibertyBlitz. I love Twitter. I use it a lot. Or you can sign up, or you can sign up for my to get every post that I do on the website emailed to you for free. So take a look, come join me on the site, help me spread the word. There's financial stuff on there, there's political stuff on there, there's social stuff on there, there's everything macro you can possibly imagine that goes on this planet. I cover it. That's it, man.
Yes, and for our listeners out there, I really love Michael's blog, and it's one of the few things I take a look at every few weeks. I've just been so busy now working on projects, so definitely take a look at that if you're not familiar with it already.
Thank you, Jason.